tricks and how to have an advisory meeting. A little bit of my background. You'll see there I am now Customer Success Manager for Spotlight Reporting. And in a previous life, I was very much on the other side of the fence, having been an accountant in an accounting firm working alongside our clients and helping them to either grow their businesses, become more efficient, achieve better work-life balance, or whatever their goals are. So I joined Spotlight Reporting 2 years ago, as I believed fundamentally it is very much a tool that can provide you with the ability to actually do that for your clients, to break it down and make it really easy for them. So without further ado, I just go to the next one. Spotlight Reporting, who are we and what do we do? Basically, we exist to transform the accounting industry. Big commitment there. In doing so, we aim to make accountants and their advice proactive, relevant and useful. This leads to better outcomes for small to medium-sized businesses everywhere. We build software and we partner with accountants to make this happen. And I think two really crucial facets of what we do there are mentioned. So one part is software, which we aim to obviously have in the cloud to ensure that you can be as efficient and effective advisors as possible, but we absolutely partner with you to make it happen. Gone are the days where you can buy the box off the shelf and therefore tick that you do advisory. This is absolutely, the transformation is a journey and a process that we all need to go through. I think the media, and it's been generally accepted for some time now that there is a move away from compliance-based fees. We are moving towards more value-added advisory services. Advisory services, real-time, are very much buzzwords at the minute, and have been for some time in our industry. But what really lacks in a lot of areas is actually how do we do that. So whilst we can sit through sessions where we understand the theory of what a great cloud accounting firm may look like and how a business advisor relationship may look, the reality is that we still go back to our firms. We have timesheets, we have clients who claim to know more about their business than we ever will, won't be receptive to our advice, doesn't want to see us anymore, feels that the more that they see us, the more that they will pay us. So how do we actually bridge the gap between the two and make sense of a whole lot of tools that are out there in the marketplace to actually make this easy and fun and exciting? With the move towards digital, with the move towards the cloud, which Matt alluded to, you absolutely have the tools, the likes of Xero and the real-time solutions. You have the ability to be really efficient in your firms with Practice Manager, Google Docs, etc. What the Spotlight Reporting tool does is aims to let you be effective as well as efficient with your dealings with clients. So what we will cover off today is what you can do before you have a meeting with your clients, various questions that you can ask them to ensure that you're getting the right information out of them, some helpful software and tools along the way, and what you can do after that meeting to ensure that you gain the momentum and achieve really the return on the investment that you're looking for. As Matt said, as we go through the session, please feel free to fire any questions into the chat box, and Matt can ask them as we go through. I think, firstly, just before we get started, so what can we do before a meeting? And I think one thing that is really important is to get clarity in your own firm, and for that clarity to be conveyed across all tiers of the firm, so that all of the staff members in your firm have an understanding and an idea as to what your ideal client looks like, so that as opportunities arise, they can be identified not just by yourself as a partner or a senior manager within the firm, but by all members of your team, so that collectively as a whole you can actually start to identify these opportunities. How can we be working with our ideal clients? What are they trading at a certain level of turnover? Do they employ a certain number of staff? Are they going to be receptive to advice? Are they actually interested and engaged and passionate about what they do at some level? because we all know that there is, our cluster of what we might call A clients or top level clients that we may categorise based on what they spent with us, based on what their goals are, or any number of criteria. But do the rest of our team know that? Not only we might want them in a particular niche or target market. We then have our, B's and C clients who perhaps they're not so receptive to our advice, or they don't necessarily need as much assistance from us. So we can, ring fence them, put them to one side, and just focus on those clients that we know that we really want to work with. And how can we make sure that we also give ourselves the time to actually do the work, to actually have the meetings with them? Our clients and ourselves as business owners and as an accountants in practice, we continually have issues cropping up, staff issues, people resign, people move on, systems fall over or need to be implemented. We have IRD deadlines that we need to meet. We have natural events and disasters that occur. We have all this other noise going on a day-to-day basis. How can we actually ensure that we resource ourselves, resource our staff, and resource our clients to make sure we have the time to actually do this? And it's something that too often when I'm dealing with the clients and accountants that actually hasn't been given any thought before they undertake this process. So they may sign up for the software without actually also then making sure they've got the right people on board and the right time set aside to actually get the tools off the ground, and in which case they end up paying for subscriptions perhaps that don't get used or don't get the right people, don't get the right training, and so that they can actually deliver these outputs. So making sure that we ourselves put some time aside if we're going to actually look at wanting to offer these tools. Are we going to have a half an hour each week where we're going to identify which clients we're going to be talking to, what we're going to be talking to them about? Have we got time to prepare and plan for those meetings? Have we given our staff time and any time budgets that we may set up to actually do training, to actually set up these reports? So really key is to decide which clients you're going to target without making the actual exercise or undertaking bigger than Ben-Hur. So yes, it's great to actually segment your client database, but actually the biggest barrier so often for these advisory sessions to actually start is the accountants themselves, by their own admission, not putting the time aside to get one started. So what I would say is to keep it simple and keep it easy. Identify one client at a time through realistic and achievable timeframes, whether that's one client a week across 2 or 3 partners and senior staff, one client a month, 2 or 3 clients a week or a month. What is it that is an achievable actual goal that you can set aside so that you actually start to gain some traction and actually start to do the work? There's no point in saying, right, we want to actually identify and target these 6 clients when we don't even have the time to have 2 or 3 client meetings in a week. So setting up a meeting with our ideal client. So once we've identified a client that we're going to approach, the context is key, and I'll come back to this in a later slide, but actually setting them up with the understanding that, hey, look, Mr. Business Owner, I'd be really keen to get together with you. This is outside of our annual tax meeting, or we were going to be signing the financial accounts. And this is so that we can actually have a better understanding of what it is that you're looking to achieve in your business. It's in half an hour of your time or an hour of your time, whatever the requirements are. But actually giving the business owner the context so that they know, owner or owners, so that they know well in advance what the purpose of the meeting is. Looking for simple clarity for a business owner who is looking to understand where they are headed. And I think that is really important. So often we get tarred with the brush that we're telling them basically what's happened. We're presenting them with information that's historical and outdated. But look, there is a role for compliance. There is a need for that. There is a time and place. But what we are really wanting to focus on is what are you looking to achieve as a business owner, as in your financial goals and aspirations, your personal life as well. We need to make sure that the time and the place that we set the meeting up allows all interested parties to attend. So, for example, is that husband and wife? Is that all owners in a business, all shareholders? Is that perhaps owner and their office manager, if they're really key in actually actioning things and getting them done? I've had advisory sessions where I've actually booked the meetings on a time and day where the bookkeeper is attending the client's premises because they have a really good relationship with that person, and they like their bookkeeper to be involved. So understanding who needs to be at the session and making sure that the time and place allows for everybody to be there. Is that going to be on the client's premises? If it is a husband and wife team and wife is only there at certain times, make sure you allow, book the meeting for them to be there. It might mean that we have to go out to their place as opposed to them coming into our office. When we're doing, setting up these meetings, making sure that we are actually as efficient as we can be. So if we're going to one area for a meeting, do we book 2 or 3 meetings in the area on the same day? Sending them an agenda at least 24 hours prior. We want the client to have the context for the meeting, to clearly understand what it is, what we're coming to talk to them about, and to give some thought to that in advance of that session. However, we don't want them to have a 10-point checklist that they must complete in advance of that meeting, and therefore if they haven't done the homework, they feel that they are going to cancel that session because they haven't prepared for it adequately, and so therefore it's at the detriment of the meeting. So it's very much a balance of making sure that the client can be as prepared for the conversation that you want to have as possible, without, as I say, loading them up with more on their to-do list, so that they are not willing to meet with you. An agenda can be something that is really simple and straightforward. It is our role as trusted advisors to educate our clients and to ask the hard questions. If we don't ask these questions, who else will for our client? What we want to do is to make, in every interaction with our client, any face-to-face interaction or any time that we can have with our client should be treated as absolute gold. We know how busy we are in our own businesses. We therefore can have that appreciation of how busy our business owners are as well. So any chance or opportunity we have to get in front of them, we need to maximise what we can actually do and the value that we can not only deliver for the client, but also understand that that is absolutely key in building the relationship with them. The better the relationship, the stronger it is, the more likely and in-depth our understanding can be. Therefore, the more that we can do for them. So it becomes a self-fulfilling prophecy. So any interaction, any time that we have with the client, we need to treat as gold. Don't be late. Make sure that you've got the time in advance to prepare. And by setting yourself and the client an agenda and giving thought to what that session is going to be like is really important. And sharing that with them, as I say, at least 24 hours in advance so that they are aware and they can be prepared means that both of you are going to get as much out of the meeting as possible. If you pull together an agenda that you distribute at the start of the meeting and your business owners and your clients therefore have had limited time to prepare, the results of that meeting are going to be limited as well. So to set it up to succeed from the start, give yourself the time to prepare, give yourself the time to prepare the agenda to share with the client in advance of it. So an agenda might look like confirming the context of the session. We are getting together to discuss where you are looking to take your business. We've got these 3 things on the agenda to go through. Are you happy, Mr. Client, that that's what we want to go through? Give them the chance to actually throw out any other issues which may have arisen that we are not yet aware of. So any key issues, like this is what we discussed last time, or this is what we know is to be important falling out of year end, this is what some areas we'd really like to discuss with you, and what's really important for the next phase. Is it the next quarter? Is it the next 6 months? Is it the next 12 months? We're going to look at the results. We're going to review the Spotlight dashboard or the Spotlight report as relevant. We'll discuss any key issues and findings, and then what we'll put together is some key actions and timeframes going forward. Any interaction, as I said, must be with your client, should be treated as gold, because the ability to get in front of them is really our opportunity to find out what absolutely drives them. Once we have a really key understanding of what drives them, that's when we can start building some really constructive conversations. We need to treat every opportunity as the ability to demonstrate our expertise as a trusted advisor. What is it about coming to this meeting is that it's going to leave the client with that's really going to be able to surprise and delight them? What are they not going to be quite expecting? And what are 2, 3, 4 key takeaways that they can get from the meeting that are going to be tangible, actionable points that they can take away that's going to improve their lives? It's going to improve their work-life balance. It's going to improve their business, their processes, their profitability. So that's what we need to make sure that we're setting at every agenda. When we're talking about context, the context we're talking is for clients. What are their business aspirations and goals? What are their personal goals? And what are their financial goals? And one thing that I did was basically present this, send a one-pager to any clients I was meeting with, and I would make sure it was sent to everybody who was interested in the session, so all shareholders, husband, wife, etc., for them to complete. And I would ask them, what does this look like in 12 months' time? What does this look like in 3 years' time? And it's really important that the threes all intersect, and that we do ask everybody how they actually, what is the relationship between those? What is your utmost goal, first of all? So is it personally that you want more work-life balance? Is it financially that you need to draw 100K from the business? Is it that you want to sell your business in 3 years' time? So what is actually your guiding light here? But how do all these other areas play into your decision-making as well? Because once we have an understanding of these 3 key areas, we can start to have an appreciation of what really is making the clients actually tick. I would save these, I would upload this and save this in our practice manager as well, so that anybody in the team, if the client would call up, could actually pull this up and understand at a glance what it is that were the guiding principles of the client. I would print it off, and in the good old days I would put it on the one file as well. It was always at the front of a number 1 file, so that we could see again what it is that are the key indicators for a particular client for the next 12 months and for the next 3 years. And they would end up scribbled with notes on them, all sorts of different things that we would then house against that client. So when we get to this session, or if we're onboarding new clients, so often I would hear people say, and hear other firms saying, well, I asked them, what do they want from their accountant? And you know, that's really great to be able to ask them what they want, but you often don't know what you don't know. My insurance broker said to me, what do you want from your insurance broker? Well, insurance. I don't know what else you do. So often people don't know what other services we as accountants can provide, and they just believe that basically anything over and above basic tax returns and their minimum requirements is going to cost them an arm and a leg. If we actually turn that around and say, what are you actually looking to achieve? What are you looking to achieve with your business? What are you looking to achieve personally? What are you looking to achieve financially? All of a sudden, it changes that they see us from being a cost, that we are doing accountant work, being their compliance and the bare minimum, to actually, we can support you as a partner to achieve these goals. We can support you with various services to actually achieve those things, and we're setting ourselves up now with the ability to actually educate our clients to the services that we can provide for them. You note that I say educate as opposed to sell. I use that a lot because I really do believe that it is an education process. I don't necessarily want to go out and sell cash flows to my clients. What I want them to do is to be educated to understand the importance of how a cash flow forecast can actually really help them make business decisions. So just by changing that thinking slightly, You can see how you set yourself up from the beginning as positioning a trusted advisor relationship where you can actually educate your clients that you have a suite of services that can assist them based on what they are looking to achieve. We so often get all the objections. If I call you more, is that going to cost me more? I'm too busy to meet with you. We are all busy. We are all time poor, typically, often. How can we actually ensure that our clients start to see us as an investment in their business as opposed to an overhead cost? How can you, Mr. Client, not afford to know the impact of your business decisions before you make them? So actually posing a list of questions that are not necessarily open-ended, but that are going to derive the right information can really assist you and help you. When I stopped asking, what do you want from your accountant? And I stopped getting answers like tax savings, a really good fee, to know that my books are being taken care of and that I can sleep at night knowing that my compliance is looked after and the IRD is off my back. Well, that's all really useful, but that doesn't actually allow me to position myself as a trusted advisor. That doesn't really allow me the opportunity to say, well, look, the IRD's off your back each night, but so you can sleep, but actually here I've got all these other services I can provide for you. How about quarterly meetings? Or how does that change things? When I understand what they're looking to achieve, it does change it quite significantly. So to go through an example of a firm that I was working with and put some context around it, they were a small electrical business, so husband and wife team, if you like, a very typical mum and dad small to medium-sized enterprise. It was set up in mid-2015 due to a few good opportunities arising at a similar time. So this guy was an electrician working for a one-man band. He had previously worked for a large commercial electrical firm. He had the opportunity, he had a couple of builders saying to him, look, when are you going to go out on your own? We need a really good local electrician. So decided that it was good timing to set himself up in his own business. They were very much tech juniors. So he was basically taking his experience of seeing what his parents, how they had run their small to medium-sized business, and replicating that in his own. Now, his parents used to put all their receipts into a cardboard paper box, print off their MYOB trial balance, back up their MYOB file, and take it down to their accountant to do their bi-monthly GST returns. And that was very much how he was going to set up his business. He had a diary system, a paper diary system that he would use for booking meetings with potential clients. He would write down there what he had done in the day, write down there what he was going to quote, and that became how he would quote from his paper-based diary and invoice from his paper-based diary that went from his van through to his dining room table as well. The wife with young children was going to do the admin side of the business, so she was going to look after the books, she told me, do the invoicing, do the GST, and eventually when time came, do a bit of payroll. These guys were very much business babies, is how I would describe them. The typical questions, you know, what can we claim, how does the entertainment work, all that sort of education needed to happen. But really what was very much relevant to them was how much revenue and profit are we going to generate, how much cash can we actually take for the business, and how much cash do we need to have aside for our tax. So very much what we were doing is taking someone who was an electrician and a very good electrician and basically taking them through, and this is not going to be unusual to a lot of you, I'm sure you can think of a half a dozen clients in your own firms that you've done this through. How can we actually change that hat from now you're just going from, not I shouldn't say just, now you're going from being an electrician to actually being a business owner. So effectively what you've got to learn on this journey is how to run a business 101. Same for the wife. She was going from a marketing background into now I'm going to do my husband's books. How can I actually, what do I be wearing. In terms of what their understanding was simply, well, hey, we're going to go out on our own, because why should we just really work for the profits for someone else when we can do it for ourselves? So as I say, they were really focused around revenue and profit. How much are we going to make? How much, what's going to be realistic in terms of how much we can bring in? How much cash do we need to have aside in the business, and how much can we take for ourselves? How much tax are we likely to pay? Wife was very nervous and didn't want to be hit with any unexpected tax bills, so wanted to know that she had plenty to put aside. I can see as well from how they are setting up their business that their processes are going to be really key for them, because very quickly they went from, at the beginning of the year, we said this is easy, running a business, I don't even need to set my alarm, I can roll out the door at 9 o'clock, come home at 5, and it's all very easy. Within 6 months he was working evenings, all the paperwork in the world, doing Saturdays as well, and they no longer had a dining room table because it was full with so much paperwork on top of it. So process was really key. Their margins, the way that they were doing things, how are they going to ensure that they were getting the right margins off their equipment, and how are they ensuring that they were using technology and their systems to ensure that they had really good efficiency within their business. Otherwise there was absolutely zero scalability. So basically he was going to be on the tools 9 till 5 to generate the revenue, and then come home, do all the paperwork, do the quoting, and pass, basically tag team over to wife so that she could do her end of the stick. So we've got a lot that we wanted to get through. Obviously a lot that we needed to coach them, a lot that I needed to coach them with in terms of a whole lot of various areas to touch on. We can't change the world in one day, and I would find that it's quite often just completely overwhelming if they did. So we pulled together for our first session this agenda. I said, right, I'm coming, we want to discuss your business goals. We need an hour of your time. We want to talk through some key issues. First off the press is going to be invoicing, because if you can't get your invoicing right, there's going to be no money coming in and everything else is going to fall down because of it. We will review the results, so we'll put them into a Spotlight dashboard so that we can really easily and succinctly review the results. We can discuss some key issues and summarise some actions so that you've got a few key takeaways to work on in advance of our next meeting, and send this out to them. Now, I did decide to do a dashboard, which is a really succinct one-pager for them. And the reason that I've done that is, as I say, because, if you like, they are business babies. Remember, this is the first time that they've had any meeting of this kind. It is also their first foray, if you like, into looking at the business and looking at these different concepts and areas as well, from people, process, systems, technology, etc. So I want to make it as easy for them and keep it in bite-sized chunks so that it doesn't become so overwhelming. If you had a slightly more sophisticated client that might have more experience, then you might decide to present first up a Spotlight report, where rather than taking one chart and having a conversation around that, you can actually extrapolate that one chart out into being a whole page of charts as well. Okay, so bring on the Spotlight dashboard. So they have got their agenda in advance of the session. We've set it up so that both husband and wife can be there. I've actually gone to their house. And we've got an hour in front of our client. I want to discuss their business goals with them, and I know that they haven't necessarily thought about anything in particular. So we very quickly had a discussion around what actually are the business goals. You've gone out on your own. You don't really necessarily know what it means. How big, how much do you want to grow? What sort of lifestyle, what sort of level of income do you want to be drawing? So these were all very much new concepts to this client, that we had a discussion around what are these business goals. So, and having the wife answer for her 12 months and her 3 years time, and the husband answer for her 12 months and his 3-year time, meant that quite easily we were able to see that there was some distinct differences. But there were definitely some areas that they hadn't thought of, and you could see them start to get really excited and really passionate about being able to build up something of their own accord. So I want, and coming back to face-to-face time is gold, the ability to surprise and delight, I want these guys to get really passionate early on and at the very beginning of the meeting. So business goals that fell out of that we started to then populate. For example, he'd like to have no more than a half a dozen staff, where he's off the tools, basically 2 or 3 key foremen with a couple of apprentices under there, where he's able to oversee jobs largely in residential and small commercial across the wider Wellington area. Her goals were that she would like to have a level of income where they were able to invest in another investment property, but maintain a lifestyle as well for the family. She didn't necessarily want to be spending more than 1 day a week in the business, and business owner decided that he didn't want to be working Saturdays. He'd like to be working his 40 hours as well. What fell out of that as well is they then got into further discussions about how they would like to have their house ideally would be freehold in a certain period of time, but that they also then wanted to maintain a lifestyle in doing so. So pretty quickly, I'm letting them do some talking. They're getting really excited about what it is that they want to achieve. We then moved on into discussing, okay, well, what does that actually look like? What does that mean based on how you're going at the moment? Bearing in mind that their key areas that they want to look at is revenue, profit, how much money can we make? How much cash can we take out? It feels like we're working really hard, but we haven't got a whole lot to show for it. But I don't want any nasty surprises either. How much do I put aside for tax? I want to educate them and how we can actually look at their processes, make sure they're achieving really good margins so that they can become efficient, so that they can start to scale and start to build out. So what I've got is what we call a classic dashboard. It's giving you six key areas that basically are 6 conversation starters. So first off, I've got one here around revenue. I know that revenue and profit is really important to them. So the green line here is indicating what last year's results are. You can see it's up and down. It's lumpy. They did, as I say, they didn't have a good process for that. The current year is tracking so that it is lumpy again also. The dotted blue line there is a budget. What I've used this to do is to support the need for what we need to have are some budgets in place so that we can actually track what do you think you're going to do in the year. What is your what ideally would you like to be doing? What are the importance of budgets and planning so that we can actually see this? And we can run these reports and have a really easy, quick visual snapshot of how you're going. And if we're going better or worse than what we think we were, what are the implications of that? I use the revenue chart at the top to talk about the need for budgets, to get them talking about the invoicing process. That's when I saw the diary come out. It's very paper-based, it's very manual. The need to talk about how can we streamline your processes to make sure that you can invoice weekly. You could invoice at the end of completing a job, that you can invoice at the end of the day. If you want 7-day terms or 14-day terms, are you sending reminders? How are you doing your quotes? They're very manual, so you can't easily pick up a quote that had been handwritten in the diary. The wife couldn't easily pick up a quote and then push that invoicing out in an automated system. So it was literally taking hours to get it out. It wasn't happening. It was being left until later in the month, so hence why it was lumpy. So I'm using that one chart to talk to all of those areas. Using the second chart, again, revenue, bearing in mind revenue, profit, cash, tax are really important to them. Revenue for the period to date exceeds budget for the period to date of 62,000. So therefore, what is our projected revenue? What does that mean, again, in terms of tax plan? I use that chart to have our conversation around tax planning. So I'm using all of these charts to just support the need to have the conversations. Our operating profits. we can see last year we dipped all down all of a sudden in March due to record keeping. We weren't there wasn't, and all the information wasn't going into the system. We were using different cards from different accounts to pay expenses. It wasn't all fully being captured through the business bank account. We had a number of expenses outside of that, etc. There were no budgets in place. So again, I use this chart to support the need and say, hey, look, if that's what's going to happen, you know, my advice can only be given on the information that is in front of me. If I don't have all pieces of the pie, because we've got things being paid for, other accounts, receipts out, then I can't give robust advice. So we had a discussion around record keeping, around how that they could make sure that all the information is in the system and up to date. We booked a session outside of that, which was an action point following up the meeting that I could have with the wife to set up rules to make sure to give her some tips and tricks and some 0101 as to how that can be happening. Balance sheet. I know that these guys don't necessarily understand balance sheet and how many of our clients can hand on heart say that they do, but I want to start the education. I want them to start understanding exactly what the importance of a balance sheet and how it works. So what I'm going to do in our first meeting is introduce the concept, give them a bit of education, say, look, here I've got it in hopefully a really easy to understand format for you. Here is our balance sheet. In green is what we own and orange is what we owe. So that is a position of our equity. What is it made up of? We've got some cash in the bank, we've got assets, etc. So rather than giving them a full printout of a balance sheet, I'm making it really easy for them to understand. Because what is going to come up in here, in our balance sheet, that won't show up in any of our revenue, profit, or tax planning conversations. Obviously, in time to come will be shareholder drawings. And so what does that look like? I use the second chart, the chart in the middle at the bottom, cash on hand monthly. Where it's showing each of those individual matchsticks, if you like, show highest balance for the month, lowest balance for the month, with the dot showing the month end closing balance. I use that to show to these guys, look, you do have money in the business. You saw that they were very reluctant to take money out or funds out because they were worried about supplier bills. They were worried about, because of course the wife had no visibility as to what was coming, about tax bills, how much they'd be putting aside. So they were really just taking out the bare bones, working really hard to build up this business, taking very little cash, so feeling like they were living on the bones of their bottom, working really hard. So I can use this to say, look, actually there is money in the business, and we can look at how much money there is in. And we can then go through the education process. Not only is it important to have a budget, but would it help you sleep easy at night if we actually had a cash flow forecast, so you can understand how much money you need on a monthly basis coming in because of how much you've got going out based on what the lifestyle you'd like to lead. Yes, that would be great. That would be so much easier. We can then also throw in scenarios, because if you're looking to take on apprentice, what is a payroll bill going to look like? Yes, that would be great. Versus what if we take on a senior electrician? Yes, that would be great. So again, I'm using my cash on hand chart to have a discussion and to be able to educate them on what their cash cycles are, the importance that we need to have really good cash flow. The last chart is really, I've chosen top 10 operating expenses to show for them, because again they wanted to see, I want to take them on an education process and say this is where, if you like, these are your top 10 OPEX expenses, motor vehicle expenses, phone materials. Putting it pictorially like this, business owner said, jeepers, I don't even realise that that's where we're spending our money. I knew that we didn't really spend very much aside from, running the van is our biggest expense. But where else do we actually spend our money as well? So again, I can see that we can present it really visually, make it really easy for you to understand what's going on in your business. Wrap up the meeting. Has that been of use to you? Yes. Okay. Right. Can you understand and see why it is that it's so important that we need to look at the areas that we want to look at? Yes. And basically use the charts purely to have the conversations that we want to have based on what I know is going to resonate with the clients and resonate with what it is that they're trying to do. I also have some other areas that I want to discuss that you'll see I haven't presented on my dashboard. So, for example, some posing questions I have for the client. Margins. How do you know and what level of comfort do you have, Mr. Electrician, that you are achieving a really good margin on the cost of the products, the cost of goods sold that you're providing to clients? Stony silence. How do you know that you're tracking? How do you keep a track that you're actually recharging all of your costs because we have such a paper-based, antiquated system? Stone cold silence. How do you know if all the quotes that you have out at the moment were to turn around tomorrow and accept, what would that look like? How much work have you got in your pipeline? We're not doing any marketing at the moment. We're not doing any referral, any lead generation. There's a few beers at the pub going on with various builders, and that's about the extent of it. We've had some business cards printed. How do you know how much you've quoted? Stone cold silence. So what we need to do is, if we can do a budget that can actually show you what you're looking to achieve for the year and what level of income you'd like to generate, we can then do a cash flow which can forecast, which can support and give you the peace of mind that you can know how much you can take out of the business, how much you've got coming in, what areas you can spend it on. Would that be of use to you? Yes, absolutely. Great. So we also now need to focus on the next session. I'd like to put some thinking around some margins. I'd like to put some thinking around how we can get some automation and some integration in your business. So very, very easily that I can have with this client, I can set up, we've got 6 really good discussions to have in the meeting. I've also got some other areas that I want to address with them, some non-financial areas, some automation and some efficiencies, but I can't bring that all into this one meeting without completely overwhelming them. That was great, that was really useful. They say, yep, we know that we've got so much we need to go and work on, and we would like to do that. What needs to happen after the meeting, what is so critical, and where often things can fall over, you must follow up. And again, make it easy, make it succinct, make it bite-sized, manageable pieces. So what actions are falling out of it? And remember, we're looking, sometimes 3 is a bit of a golden number, but anywhere between 2 to 4 tangible takeaways that they can actually leave that meeting with, where I have been able to give them some value that they can actually go and work on, or it might be that I'm going to work on. Who's going to do what and by what time frame? Follow up, follow up, follow up. Create, use technology and templates. So, for example, when I set that agenda, that basically becomes the basis of my follow-up email to them. You'll see here comes my agenda. Number 1, we were going to discuss business goals. Number 2, we were going to discuss key issues. Number 3, we were going to review the results. 4, go over some specific areas. And 5, have the actions. So all I'm doing is basically putting in some bullet points of how those conversations went to follow up. If you like, in advance of the meeting, during my prep for that meeting, I've almost drafted the follow-up email to that client. And obviously you'll tweak this for how conversations go during the meeting. But so our business goal, they have revenue targets that they would like to meet. They've got staffing resources and process efficiency that they really need to address, so that they were going to go away and have a talk about those, because they were areas that they hadn't necessarily even thought about. They were going to go out on their own. They didn't realise that there might be a different way of doing things with the likes of Xero, with the likes of integrated systems, SimPros and Fergus, etc. They were very aware leaving that meeting that they needed to go through and address the invoicing issues, so that they could automate and become much more efficient right from when they quoted a client to when they received payment for a completed job. So we need to go and find some way we can have an end-to-end solution. We reviewed the dashboard. We could see that our revenue growth has been very strong as we've started out. Our operating overheads are being well managed, and we've got quite a favourable cash position in the business. But what we need to do is go and build on that. We want to look at automated solutions for quoting. Integration with suppliers will ensure we have better stock and margin controls. Immediate invoicing should be achievable. And we also might look at deposit/payment terms for larger jobs to be considered. We also had conversations, for example, the tools that the client was going to use. So currently uses an iPhone, didn't use it very efficiently. Did he need to have an iPad where he could basically, again, use some tool that could bring up supplier lists, that he could meet with a client within 15 minutes after the meeting, sitting in his van, he could whip out a quote to them. That feeds through into Xero. Wife can pick that up to invoice. Wow, that would be great, they said. Well, it's not unachievable, it can happen, but what tools do we need to actually resource you to do it? Same, I'm educating them at the same time, saying, right, are we going to share this as a Google Doc? This is going to be online. How can we do this so that it becomes as efficient as possible? Use technology, use templates. This agenda that I've now created them will be an agenda that I tweak for the next meeting. As I said, the agenda that I put together became the basis for my follow-up email. Everything I'm doing, I'm trying to think, how can I be as efficient as possible with this? How can I make it scalable for my client and for me? And summarise. So I want to make sure that we've left them with some good clarity, some real value add from the meeting, and some tasks that we're going to do at the next meeting. So they were going to go away and review and streamline their invoicing process. They were going to investigate some systems. Simpro and Fergus were two that he had heard of, that he wanted to go and have a look at. I'm going to prepare budget and cash flow forecast. I've given them a quote for it in the meeting, said, look, we need to do this. They've agreed that it's very important. It's going to be in the range of X. Are you happy for me to do that? Yes, that would be great. And I'm also going to set up a time with the wife to go through some tips and tricks on making sure that their financial records are really set up properly, refining their chart of accounts, setting up some rules in Xero, making sure their invoicing templates are set up, and giving her an hour to make sure everything is humming along. Some people might outsource that to a bookkeeper. In this case, I didn't. And there was an extra charge for that as well. So they've got a couple of things that they can work on. I've got a couple of things that I can work on. We actually agreed the next meeting was going to be in 2 months' time because of holidays and different things that people had going on, and needing the time to actually make sure that we had the time that we could put aside to do what we needed to do. Again, more sophisticated clients might be prepared to meet monthly. Other clients might not want to meet you for another quarter. Follow up is key. I'm just very conscious of time. How am I going here, Matt? We've got 10 minutes or so. As you have heard me talk about dashboard, that was one example of a dashboard template that we have at Spotlight. That was called a classic template, where you have 6 charts. We have almost 100 odd charts in the gallery that you can choose from. So it's really important that you get some clarity on what you want to achieve with that client to make that selection easy. We have a reporting tool where you can do a deeper dive for management and board reporting, and we also have a forecasting tool to make preparation of those budget cash flows very easy. You can have a trial of all of the tools by going to spotlightreporting.com. For advisors that are looking to use the complete tool set, we do have a Super VCFO options available, which gives you access across all of those 3 tools that I've mentioned, the dashboards, the reports, and the forecasting. And as a special offer for attending today's session, you do have a 50% discount available to you for your first 2 months on Super VCFO packages. Have we got any questions coming in there, Matt? I think that's
yeah, we do. So just before we get into questions, if you're interested in finding more about Spotlight reporting, and especially that deal, there'll be a little survey that goes out as the webinar ends. If you just tick the yes box, and someone will follow you up and get in touch about that. So Danelle, that was fantastic. Thanks for the presentation. Certainly, I took away some things that we could improve our meetings from that as well. So it was really useful. We'll also be following up with a checklist for conducting business advisory meetings, a white paper written by Richard Francis, who's the CEO of Spotlight Reporting, and that special deal, and we'll give you the webinar recording and the slides as well. So I'm going to jump into the questions. Had a question from Jenny Danelle, which was, how often should you meet with clients?
Um, Good question, Jenny. Really good question. And um, look, I think there is no right answer. In a perfect world, it would be, look, I would be getting in front of them as often as you can and as often as the appetite to meet with you is. As I said earlier, you also need to make sure you give yourself and the client the time in between sessions to actually be able to grow and do work on the projects. In a perfect world, it would be monthly for some clients. For others who are slightly more so this was a new business, so there was a lot of education and things like that. For other clients where they might be slightly more sophisticated, it might be sufficient, and they are more. They have perhaps more people on their team to look after various areas. So, getting everybody together, you can achieve so much, but getting everybody together is to do for a business that's been established 10 plus years, or for certainly a longer period of time. You might push that out to bi-monthly or quarterly. I really wouldn't think that you'd want to leave it more than quarterly to be meeting with the client, and quite frankly, any more than monthly is probably a little bit of overkill. In saying that, I do know, there are situations where if there are issues in a business, particularly around cash, often if once the bank or the idea of being called in, an accountant might be meeting weekly, but that is generally not in an ideal situation. So I would say anywhere between monthly, bi-monthly or quarterly. Does depend on what the client's appetite is as well, because you want to make sure that those sessions are as constructive as possible, and deliver as much value as possible. So you need to give yourself the time to be able to do that. And remember, we want to treat each interaction as gold and make sure that we've got plenty to surprise and delight them with each time.
Cool, thanks. Question from Brendan. What do you think about holding meetings on Skype or I guess other forms of kind of video conferencing?
Great question, Brendan. It's the day and age that we live in, and look what we're doing right now. So a little bit hypocritical of me if I say they're not a good idea, right? Look, you've got to make it as easy as possible. If your client, and I'm not going to be ageist here, but if your clients are perhaps younger, or if they've got more of an appetite again for technology and they're happy to do that, then great, absolutely. Look, if it can save you travel time, to and from the meeting, then again, remember, we're being efficient and effective as possible. Super. Make sure that you've got good connections. Make sure that the client can see. Often with Skype meetings, I find you can lose the sort of the first 5 or 10 minutes with the tech. Make sure that they can see your screen, so that you can still be working off the same, the same document, or if you've got it saved in Google Docs. And if that's what needs to happen for you to get in front of a client, and that's the best way to do it, that's fine. And if you can't have a meeting otherwise because of that, whether it's because of location or someone's just too busy, that's fine. But never underestimate the power of sitting in front of a person. And you may wish to alternate. So we'll meet every month, but every second month is in person. And every other month we're going to have an online, just a quick half-hour catch-up to make sure everyone's on track, or if there have been any other issues that have arisen, any urgent things that we need to address. Some key person has resigned, we're taking up a new system, someone's approached us to buy us, whatever can be addressed within those sessions. But look, there is a time and place for it, but again, face-to-face interaction with the client is gold, and we should treat it as such. If they're prepared to meet us in person, then I think that should always be the go-to position. As I say, if it's at the detriment of the meeting because they're just too jolly busy and they're happy to meet with you online, then absolutely do so.
That's great. Well, I think that's a really good place to wrap things up, because it's kind of where we started with me saying, that value of meeting people face to face. And as you say, that is gold. And I hope that everyone today has been able to get some really good insights onto how to conduct a really great meeting, because I think that the value of those is not disputed. So, Danelle, thanks very much for that today. Thanks for everyone for coming along. And as I said, we'll follow up with an email with those giveaways in it. And if you want to hear more from Spotlight or BizInc, then you'll get a little survey as the webinar closes now. So let's wrap things up there, and hopefully have a great rest of your day.